Global tensions are finally cooling down and markets are breathing a little easier. Back home, the PSEi managed to rebound while Congress approved a new budget that could reshape government spending. But with investors still cautious, can this recovery really hold? Hi everyone, welcome to another episode of Intelligent Investing. I'm April Lee Tan. Contrary to expectations, the local market managed to post gains last week, with the PSEi rising 0.9% to close at 6,089.53. While sentiment improved, market breadth remained cautious, with 142 losers still outnumbering 125 gainers. Foreign investors stayed on the selling side with 844.6 million pesos in outflows. Average daily value turnover was still light at 6.6 billion pesos, reflecting a lack of conviction among investors. Global markets breathed a sigh of relief after President Trump softened his tone towards China after threatening 100% tariffs the previous week. He clarified that the U.S. just wants to help China, not hurt it, and later admitted that the proposed tariffs were not sustainable. Treasury Secretary Scott Bessent also suggested the U.S. may extend its pause on import duties beyond November 1, provided China delays export controls on rare earths. Well, I think 100% tariffs is not sustainable. If we think about what happened in April when Trump initially talked about similar levels of tariffs, of course, the market reacted very negatively. So I think it's quite obvious that Trump is aware of the negative repercussions of 100% tariffs. Knowing the style of Trump, he will say something, that will really catch your attention. But then at the end of it, he will soften. That's why the term taco trade came about. Trump always chickens out because it seems like he'll say one thing and yet he'll do another thing when the markets react negatively. Among local stocks, ICT climbed 3.1% after South Africa's High Court dismissed a challenge filed by APM Terminals, clearing the way for ICT's 25-year port terminal development contract in Durban. The ruling confirms the contract's validity and reinforces ICT's expansion story in Africa. Gold miners extended their rally as gold prices surged by another 5.8% to a new record of $4,252 per ounce. Top gainers included LCB, MA, OGP, and Apex Mining. Meanwhile, PX fell 4.5% despite higher gold prices as investors locked in profits after its strong 19.8% rally the week before. Similarly, shares of oil and gas exploration company PXP slipped 8.6% on profit-taking, following a 52% surge earlier, which came after President Marcos signed 8 new exploration contracts worth 11.6 billion pesos as mentioned last week. In contrast, Cebu Pacific dropped 6.2% after reporting flat 3Q passenger volumes of 6 million, falling short of expectations. Year-to-date, the total reached 20 million, up 13.9% year-on-year but still only 69% of the full-year forecast, raising the risk of a weak earnings. DigiPlus was another major decliner, down 5.3% after announcing a temporary suspension of its Brazil operations, which did a soft launch in September. The company plans to relaunch in early 2026 with a new locally tailored version of its Game Plus platform. Nickel Asia dropped 1.8% after the Department of Energy revoked the geothermal service contract of its subsidiary Mindoro Geothermal Power Corporation. It was also asked to settle a $120,000 obligation for training assistance. However, the financial impact should be minimal. Nickel Asia had already set aside a 1.2 billion peso provision last year after deeming the project not viable. The House of Representatives passed the proposed 6.79 trillion peso national budget for 2026 after 2 months of debates. This is only 7.4% higher compared to this year, meaning less room for fiscal stimulus. However, the redirection of around 79% of funds originally allocated for flood control projects towards education, health, and agriculture is a step in the right direction, as investments in these 3 key sectors should help drive long-term growth. Finance Secretary Ralph Recto warned that the recent corruption scandal has started to hurt growth and credit sentiment. He said economic growth likely slowed in the third quarter following President Marcos' reforms in response to the scandal, with the drag potentially extending into early 2026. Still, the Secretary said the economy can hit the lower end of the 5.5% to 6.5% growth target this year. Recto also confirmed that S&P Global Ratings had delayed a possible credit rate upgrade for the Philippines from BBB plus to A status because of the controversy. He cautioned that proposals to cut the 12% VAT rate could further threaten fiscal stability and the credit outlook. Well, the 7.4% increase in the budget is actually small relative to 2024 because I think the past 2 years, the increase was more than 10%. So 7.4 isn't really a large growth at a time when the economy is showing signs of weakening. However, what I liked about the proposed budget is that the funds that are supposed to go to the flood control projects, which we know right now is like most of them are ghost projects or bad projects anyway because they're substandard, they'll now be invested in areas that matter like agriculture, education, and healthcare. And the reason why these three sectors are important is because, first of all, if you spend on agriculture, that should help ease inflation on a more sustainable basis, which is good for every and all Filipino. And then education and healthcare, because we are about to enjoy the demographic dividend. But, you know, we need to spend on educating the Filipinos, the youth, so that by the time that they reach their productive age, they can earn more, they can be more productive. And another part of it is, you know, they need to be healthy for them to be productive. So I think these areas are very important for the Philippines to maximize its long-term growth outlook. For our stock spotlight, let's talk about BPI, which kicked off the earnings season reporting 17.5 billion pesos in net income. This was flat from last year but broadly in line with expectations. Profits were pulled down by the slight drop in non-interest income and the sharp rise in provisions. BPI's non-interest income fell by 0.7% as the bank booked a large trading gain during 3Q 2024 amounting to 2.2 billion pesos. Meanwhile, loan loss provisions more than doubled to 4.6 billion pesos from 1.8 billion pesos during the same period last year. However, the increase was only due to the normalization of provisions coming from a low base last year. More importantly, asset quality remained stable with the NPL ratio steady at 2.3% and NPL coverage is still healthy at 96.5%. BPI's core lending business remains solid with gross loans up 13.3% and net interest margins improving by 30 basis points to 4.6%. Improving margins despite lower rates should help alleviate concerns of margin compression. BPI's double-digit loan growth and higher margins led to a 16.4% growth in net interest income. We reiterate our buy rating on BPI with a fair value estimate of 144 pesos. Aside from its attractive capital appreciation potential, BPI provides a dividend yield of 4.3% based on its current price. Despite the rebound, investors are expected to stay cautious this week as several key factors could dictate the market's next move. More companies are scheduled to release their third quarter results this week. Stronger than expected earnings will be crucial for the markets to sustain any upward momentum. After moving sideways last week, the peso remains under close watch. Technically, a break above 58.4 could push the currency towards 59.10, adding renewed pressure on equities. The U.S. Bureau of Labor Statistics will finally release September CPI data after delays caused by the government shutdown. A higher-than-expected inflation print could dent risk appetite globally, as it would temper hopes for further Fed rate cuts and potentially weigh on the peso. Investors are also monitoring signs of strain in the credit market. Recent bankruptcies by Tricolor, a subprime auto lender, and First Brands, an auto parts supplier, along with reports of loan fraud at regional lenders Zions Bancorp and Western Alliance Bancorp, have raised fears that these may not be isolated incidents. JP Morgan CEO did the best quote to say it. I probably shouldn't say this, but when you see one cockroach, there are probably more. And so everyone should be forewarned on this one. So I think the reason why it's important is because these bankruptcies could just be the start. They may not be isolated incidents. So what happened with these companies is that, I guess, like during boom times, everybody's so relaxed. So what happened with these borrowers, I think their collateral, they pledged it to private creditors, but they did not pledge it to just one creditor. They pledged it to several creditors. As far as Zion's and the other banks, regional banks are concerned, I think that particular incident caused them to review their loan books. And then they realized, oh, that's why they talk about fraud. I guess they had borrowers doing the same thing, pledging their collateral to several lenders at the same time. So, given how bad the economy is, if these borrowers cannot pay, then, the lenders will have a hard time recouping their investments or the money that they've lent. And why does it matter to the Philippines? Say, because of this incident, you see risk appetite diminishing or investors being more risk averse, it would negatively affect all asset classes around the world, not just lending to private credit, private equity, but also U.S. equities. And historically, of course, we've talked about this. Every time the U.S. market goes down, the Philippine also goes down. We have never decoupled. And we could be affected in that respect. The risk appetite for Philippine stocks could also be negatively affected. So this is one event that I think we should at least pay attention to, given its potential negative repercussions on global risk appetite. The market's rebound is a welcome sign, but sentiment still feels fragile. Earnings results, the peso's movement, and U.S. inflation data will likely determine if this rally has legs, or if we're just in for another short-term bounce. Like this video, share it with fellow investors, and subscribe for more market insights every week. Once again, I'm April Tan. Thank you for watching, and remember to stay sharp, stay selective, and invest intelligently.